This is episode 1140.
We went from 28 legal entities to 14. That's a huge process as well, but it cleans up a lot of noise. We had, for example, 4 entities in the US, 4 in the UK, 4 in Germany. That doesn't make any sense if you want to be streamlined financially in terms of operations. And then we migrated these systems as well. We have now one ERP system since this year. So for the first time in 4 years, someone in finance can actually see the total numbers in one system, right? This sounds very basic, but it was really difficult to get there. And then we also improved a lot of processes along the way. And also I had to change a couple of reporting lines and hire certain new people for the new job, right? Because we had, by new job, I mean of the combined companies, because we had people from one side or the other, and now we were twice the size and 4 times the complexity, let's say.
Before we introduce you to Niels Boon, a quick thought. Every finance leader eventually faces the moment when the dashboard says one thing and the books say another. At Cint, that delta wasn't cosmetic. It was existential. You'll hear how Niels tackles gaps like these with 3 levers: narrative clarity, pricing truth, and system simplicity. In a year when synthetic data and automation are redefining what insight even means, his team is rebuilding trust the hard way, entity by entity, platform by platform, while teaching the business to price for profit, not applause. In the next few minutes, you'll hear what he kills first during an integration, how he closes margin gaps, and why EQ can beat a perfect slide deck. Our talk with CFO Niels Boon begins after this. Niels Boon is with us. Niels began his career at McKinsey & Company before moving into Europe's fast-growing digital economy, where he led finance across sectors spanning e-commerce, health tech, and workforce platforms. His career is centered on scaling technology-driven businesses through rapid international expansion and transformation. Today, as Group CFO of Cint, He's helping advance the global insights industry through automation, data, and disciplined growth. Niels, welcome.
Thanks, Jack. Welcome. Excited to be here.
So, Niels, we're going to begin where we always do. We want you to look back. I mentioned McKinsey already. I couldn't resist. Always interested. I know you're a strategy consultant, but I'll allow you to tell us the story. Take us back in time and identify some of those experiences you feel prepared you for this role.
Yeah, I think even when I go back a little bit before McKinsey, I started out in investment banking as well in London in like long time ago, doing some M&A and working on deals 24/7, learning like how it all goes in the real world with valuation and forgetting everything you learn in school, right? And I think that's really where I, for the first time, met with the real finance world and like what discipline is, working against deadlines, etc. Then later I started out at McKinsey, like you mentioned already. I did it for about 5 years. I was based out of Amsterdam in the Netherlands, but always working across Europe. Different industries, different countries, and always focused on corporate finance and strategy as well. So I did a lot of work for like private equity clients, doing strategic due diligence, M&A, valuation kind of topics. So it was really a great school as well. Also to learn with how to work internationally with different cultures, different languages, different people. And then I moved from McKinsey into the real world, to a company called Zalando. That was the fastest and the fastest growing online retailer at the time. They also did the biggest fashion or the biggest tech IPO in Europe at the time. That was really great. So it's similar to Amazon. You had Zappos as well. It was acquired by Amazon a long time ago. So this was kind of the European equivalent. And there I started a new team called Strategic Finance. So it was again on a crossroad of finance and strategy. And I was basically preparing the company for the IPO. So focusing a lot on how to make the P&L better, how to make working capital better, get the company in shape, and do an IPO afterwards. So that was what I was doing there. And then after that, I became CFO for the first time. I was still only 28 back then, so quite young, but I thought, let's just do it. And worst case, it goes wrong. But since then, I've done nothing else. So I really like it and enjoy it.
Can I, that chapter, your first chapter at Zalando, where your first chapter where you're playing a senior finance executive, the finance leader. What lessons about scaling finance functions have stayed with you from that experience? I mean, it seems like you had to learn quickly.
Yes, exactly. The company was exploding back then. So I think we were hiring about more than 100 people every month. So it was crazy. You couldn't even keep up with what kind of departments were existing at the company, right? And then my job was to get it in shape, financially speaking. So one lesson is, if you want to go fast, you should just hire and not think twice, right? Just go, and don't look back. But then at some point, you're reaching that you're hiring way too many people. You have overlapping departments. People are doing similar things from different departments, tackling the same problem. Because you hire eager people, they see the same problems, they start fixing them, right? But if 3 departments are working on the same problems, it's not going to work anyway, of course. And it was difficult to find out who was in the end responsible for anything. So as you scale a company, you need to keep on adopting reporting lines and responsibilities as well. And usually that comes later when it's too late, let's say. So I learned a lot from that. And also a lot of things went wrong on the data side with finance as well. Like many things were not even possible to keep track of. We found out when it was too late, and then you have to go back into time, try to clean it up. So the infrastructure was not growing as fast as the revenues were, which is also good in a way, of course, because it's a luxury problem. But I think in a perfect world, you would want to scale a little bit more managed in a channeled way, let's say. But in reality, that's hard to do.
Along the way, you moved from health tech to staffing to insights. Can you tell us a little bit to how you might have had to adapt or change your playbook a little bit?
Yeah, that's a good question. So I've always worked in tech, I say, but at the same time, it was always tech within another industry, more or less, right? So I've seen different business models and industries like you allude to as well. So you always need to adapt quickly to the industry, and the certain companies, they always have industry experts. So for example, in health tech, there were a lot of doctors working at the company. So it was a completely different culture as well. And you had to deal with regulation much more. I was even responsible for that at some point as well. So you have to deal with a lot of different risks. But at the same time, that also impacts your financial job. So if you don't know what the biggest risks are, you cannot mitigate them. And then you cannot do your job as a CFO either, right? So you need to quickly understand what's important, what are the key drivers and KPIs of this certain industry, and then adapt the P&L and the financial situation around that. So I went to staffing after that. It was a marketplace model for staffing. So it was like a marketplace for companies who need short-term staffing. They have short-term staffing needs because someone gets sick in a store or someone just for some reason doesn't show up. Then we would quickly deliver last-minute people to do the job. So it was like a marketplace model in a way similar to Zalando, which was like a marketplace for clothes, basically for fashion, right? So of course it's partly different, but also similar. You have demand and supply. You need to match it. You have the same problems in a way. The KPIs have different names, but they're kind of measuring the same. And then right now I'm in the insights industry, market research, but we are also matching buyers and sellers on a platform again. So there is a red line to it, but you don't see it maybe from the outside right away.
Along the way as well, you've navigated several private to public transitions. I think you mentioned an IPO and actually some major acquisitions. Which of these milestones, let's say, most tested your agility as a finance leader?
That's a good one as well. I think maybe also I would even pick some that did not succeed. That's maybe a bit of a strange
Even
answer.
better, yeah.
But I've worked on so many almost exits that then didn't become an exit at the end, or huge funding rounds that fell through at the last minute. I think those are much more challenging and difficult to manage, because if it's successful in the end, you can look back and say, I did it like that, and that decision was the right one. I think more about when it didn't work out in a way. So one time we were doing a funding round of like 100 million. We were supposed to be a unicorn at one company, and then everything was going well. But at the same time, the process took longer and longer. We had only one lead investor left over. They said, we take the full round. We don't want anyone else in the round. So we kind of let anyone else go. And then, of course, the number one that we only had left over fell out, and I was burning 4 million a month in cash, and we had like, I don't know, 6 or 7 on the account, right? So that was not too much. Then we had to do a huge pivot, do layoffs, etc. So I think those moments are more telling, and I remember those more even, I think, because that's really difficult. When do you take that decision to go from we're raising 100 million and we're a unicorn conquering the world to, oh, actually we're raising nothing at all. I need to cut people and we need to do a bridge round. So those kind of experiences, I think I have them more marked in my memory ultimately.
Are often founders involved? Were founders involved in these companies as you joined them? Can you reflect a little bit on those founder-led companies?
Yeah, I would say all of them, actually. Yeah. So typically it was founded and then by several people, right? And then at the end, when it gets more mature, you have maybe 1, 2, 3 founders left, depending on how old it is and what kind of type of founders they were. Many founders are great at the beginning, but they don't enjoy it as much anymore as companies mature, right? And that's kind of the moment when I typically get in. So I worked a lot with founders. It's always difficult sometimes because it's their baby, right? And you come in from the side to help put things in shape. So that's sometimes difficult, but at the same time, they are really passionate about the company as well. And I'm also with full energy, always working towards whatever needs to be done at that moment, right? So if you want to have someone next to you, a founder CEO is always in the same mindset. So from that perspective, it's great.
How did the original, these are always interesting stories, how you connected with the founder. Maybe there's some cases where the founder actually recruited you. Maybe there's some cases where you met the founder only months after being hired. I don't know, but can you reflect a little bit on how it might have varied in terms of how your relationship with the founder was established and matured?
Yeah, I think for me as a CFO or incoming CFO, the most important person is the founder / CEO, right? Assuming it's the same person. So I definitely meet them at length before joining. You need to have the right vibe mutually, of course, right? If they think I'm not the right type, we shouldn't do it either. So I definitely met them before. Sometimes it was a bit random, like at an event and you talk about the company and then they message you later and they say, oh, actually we're looking for a CFO. Maybe we should talk for real next time. Or it goes in a normal way. Let's say reach out by a headhunter with the profile and everything. And then you say, okay, that might be interesting. Then the next call is always with the founder CEO first to see if there's a match. And then you take it after that, of course, to the next steps. So it's definitely the most important person to connect with. The same, I would say, for the board and investors as well. So it depends a bit on the setting. With a public company, it's not going, you're not going to investors right away. You talk to the board. But when it's private equity or venture capital owned, there's usually 1 or 2 major investors in there. Sometimes they recruited me as well directly, and sometimes it was in a normal way going through the company, but then still you want to have a good connection with them as well, understand what their agenda is as well, right? Because that might be different from management. And as a CFO, you also report to the board and shareholders, of course. So it's always a couple of people that you need to keep happy at the same time.
Having now served as CFO and helped grow businesses that have been rooted across several different European tech hubs, Berlin, Amsterdam, Stockholm. What do you see as the defining characteristics of a global CFO mindset?
Yeah, so I've worked mostly in Berlin first for about like 10 years as a CFO, but the companies were always international as well, often with a US component, at least a subsidiary. Sometimes that was bigger, sometimes smaller. My current company is Swedish listed, so we're listed on the Stockholm Nasdaq, but at the same time, 2/3 of the revenues come from the US. So in a way, it is more an American company. The CEO is also the original founder from the American business. So it's more mixed as well. So ultimately, being a global CFO versus being one from a country, a certain country, mainly operating there, you need to deal with different cultures, regulations, and also more complexity in general. It implies that you have a couple of entities. You have different decisions to make. From which entity do you generate the revenues? Where do you hire the people? Do you want to create a certain hub for tech people in a certain country or not? How do you split the people across different entities? And then you have also some kind of, like a lot of tax implications as well, right? How do you do transfer pricing between the entities, etc.? So automatically, when it's a global business, it becomes more complex. But I like that setting. So I would always want to work for a global company because I think that's really the most exciting part of the job, actually.
Niels, we might have a few more career-related questions for you a little later. Right now, we'd like to find out about Cint. Tell us about this company and the opportunity. And let's see, you joined, and forgive me, I'm going to look back 2024. So you've been there a year and a half, roughly, I suppose. But
Yeah.
Tell us about this opportunity that came your way once again, and why. You know, what excites you about it? What are its offerings? Tell us about it.
Yeah, it's a good question. So I joined indeed 1.5 years ago. I like special situations, I would say. So there has to be like some kind of edge that something has to change or something is already changing or it is supposed to change faster or something like that. The situation at Cint was they did the IPO in 2021 and then they acquired their American competitor for about $1 billion USD. So it was at like the top of the market when it was huge and everything, right? So they combined, but they never really integrated. And since then, the share price lost more than 90% of its value. So right now we are a bit north of 2 billion Swedish kroner, crowns, which is about like 250 million USD. And we are like a global company now with 2/3 American revenues, the rest spread over the world. It's coming from 130 countries. We have people in 14 countries right now. So it's a Swedish company with an American footprint, revenue-wise, and a global footprint in terms of people. So that was a perfect setting for me. And at the same time, the opportunity was that the company had to integrate still. So the two companies were separate from each other. There were actually a couple of more smaller acquisitions as well that had to be integrated. So it was a bit of a construction pit, let's say. So we had to go through a lot of work, and I thought, okay, this is actually great. I was the fifth CFO to join in 4 years, so that's always like maybe not the best moment to step in, right? But for me, I kind of like that. I'm like, okay, let's do it.
Now we're intrigued. Now I'm like, wait a minute. Well, congratulations. You're there 18 months. What roadmap? And again, this had to have been a challenging environment, integrating this large U.S. Company into. Can you tell us why your mindset was perhaps appropriate to take this on? And you just kind of revealed it to us. You were like up for it. Why? This is. Tell us about it.
I've been asked the question why multiple times, both internally, externally, as well as my friends. So that's a good question. Yeah, I like the challenge, and I want to see the end result of changing something. So I think if a company is kind of stable and growing at inflation rate, let's say, and not moving anywhere, no new product launches or whatever is happening, no M&A, no action, then I would probably get bored. And here we had to integrate the companies. We have two business units. One of them is declining. The other one is actually growing. So how to manage that shift. We also have to deal with industry challenges and opportunities at the same time around AI taking over part of our business potentially, or that could be the opportunity at the same time, right? So yeah, all those things combined, I really thought, okay, this is a bit challenging. It will be a tough first 12 months for sure. But let's go through it and see where we land. And yeah, now 1.5 years later, it's a completely different company from when I started already. And it's really, great to see the difference basically. So
how did you achieve the visibility into that business? I mean, part of the challenge is understanding how it's performing, what's overlapping, what's not. I mean, help us better understand what the integration challenge is. We've read so many post-merger integration Harvard Business Review articles, but what
yes,
don't
exactly.
they tell you? What to give us a better sense of what the integration challenge might have been?
Yeah, I think you're right. Like I also read a lot about these Harvard Business School articles, or just in university you get it as well, right? And you know the theory. You also know that from M&A, 2/3 is not successful, or whatever the number is.
Right.
And yeah, there are different things coming together. Cultural differences is one of them. I think that was actually mostly tackled by the time I arrived. But still, some people felt more like company one or company two. By now, we have roughly 1/3 of each. So we have 1/3 of company one, 1/3 of company two, and 1/3 of the people like myself came in later and they don't care which company was company one or two to begin with. We have today's company, right? So that's, I think, naturally solved, but we had a lot of turnover, of course, in the past. And then the biggest problem, I would say, is everything around data. So we have a lot of systems, product systems, different revenue streams, legacy ones, some were like 20 years old. We are integrated with customers through APIs. So that means it's all automatically happening in terms of revenues. And then now we are trying to merge everything into just one system on the product side. So that goes with a lot of hiccups. So you have to switch something off. You don't know what you're breaking. Then you have to train every customer, and also on the supplier side, because we're a marketplace as well, on how the new platform is supposed to work for them. Of course, it's not working properly the first time, and those kinds of things. And then at the same time, because we're a listed company, we always need to report perfectly accurate financials, right? And of course, that's tricky sometimes when the systems are not working properly, or we deprecated one system, but the new one wasn't up and running, or maybe both are tracking the same revenues, like those kinds of things we have seen a lot there. And we also still had, for example, multiple ERP systems, multiple CRM systems with billing information in there. So there was a huge mess, if you will, in terms of invoicing clients, and then let alone that they were going to pay those invoices, right? So there was also a whole backlog of accounts receivables on our balance sheet. That was the main thing I could see from the outside as the number one problem. But then to solve it, you have to go through all these system challenges first. Otherwise, you just keep on adding problems to the same pile.
What about the finance organization itself? Did you need to reorganize that in some fashion?
Yes, also, exactly. Yeah. So given that I was like the 5th CFO in 4 years, everyone thought there's another one, right? Let's see how long this one stays. So the motivation wasn't very high. And there was so much work to be done. And it was just too much. And at the same time, the data quality was so bad. And this is the number one thing that finance teams don't like, of course. They want the perfect data, right? So in the end, we went through a lot of reorganization at the company level as well, meaning we went from 28 legal entities to 14. That's a huge process as well, but it cleans up a lot of noise. We had, for example, 4 entities in the US, 4 in the UK, 4 in Germany. That doesn't make any sense if you want to be streamlined financially in terms of operations. And then we migrated these systems as well. We have now one ERP system since this year. So for the first time in 4 years, someone in finance can actually see the total numbers in one system, right? This sounds very basic, but it was really difficult to get there. And then we also improved a lot of processes along the way. And also I had to change a couple of reporting lines and hire certain new people for the new job, right? Because we had, by new job, I mean of the combined companies, because we had people from one side or the other, and now we were twice the size and 4 times the complexity, let's say. So that requires a different type of person. So that also helped, and all combined, we are now in a much better shape. So when I came in, we have an employee satisfaction score. It was like the worst of the company, by far, the finance team. Everyone also from other teams complained about finance team, and they knew it was not delivering, right? And right now we are coming out of the tunnel. We just had another survey again about employee satisfaction, and finance team actually scored the highest of the company now. So that's after 1.5 years. So I'm really proud of that one in particular, because that means things are improving for their lives in the finance team. And that then means that probably we are performing much better. And of course we are. I can also measure it in different ways. But that is the key kind of health check for me. Like, are the people really happy to be here, or do they all want to leave, basically?
I want to explore this a little further, because I think you've accomplished something that's many finance leaders would find challenging. I think that the notion that you were once client-facing at McKinsey and Company might have sharpened your, let's say, your EQ a little bit as you walked into this environment, and your ability to restore confidence. And I mean, you walked in and frankly, a lot of them pointed at you and said you had a target on your back already. I mean, it's not, given the history. So what you did is quite an accomplishment. I mean, did you find yourself, were you spending time in the US? I mean, how did you restore? And you said certain cultural aspects had already been restored, but the finance team perhaps was not necessarily as far down that path. What is it, steps that maybe you took, you were more mindful of, you made a priority up front, realizing you had to, if you were going to succeed here in relation to culture and restoring that faith?
Yeah, you're right. So I am actually a lot focused on the EQ side, and more a people manager than an accountant, for example. So I don't have an accounting degree. I come from the McKinsey side, like you mentioned as well, right? And client facing definitely helps. It's also in my nature. So I get along with different types of people, from an intern to board members. Like I can really relate to them, and I'm really interested in them as well. And by using that skill, I break the ice quite quickly with people, and then I find out what's driving them. What's the problem for you, in your job? Like, what do you see as the biggest things to tackle? And like that, I go around everyone, not just in the finance team, but also outside. So I go to the sales team, I go to legal team, I go to R&D team, and I ask them, what do you see as the biggest problem in finance? And of course, they see different things, right? Some of them are really small and superficial, but if you fix them, it has a huge signaling effect. For example, the most employees, they always complain if you don't pay their expenses on time, right? The reimbursement. So if you can fix that one, you're already the best CFO they've seen in years, because they get their money back. And I had a couple of those things that helped. Smaller and then at the same time, just listening, I think you learn so much from the business. They also have solutions partly, but they feel maybe they were blocked or they were not allowed to speak about them. And then I just focused on the biggest pain point. So there were 2 teams that were like raised the most, as like all the problems were with those 2 teams. So I just took those 2 teams and let them report to me personally directly, instead of it was like 2 or 3 layers down below the CFO before I joined. And I thought I'd just keep them with me until everything is solved. So I still have them today because I think we can still do better. But this is really helping as well. And then I also meet all the people on the team. So not just team leads, but also everyone underneath. I do one-on-ones in the beginning, at least. At some point, you don't have time anymore to speak with everyone, right? But at the same time, I try to do it as much as I can. And then also not just with finance team, but other departments, as well as the management team, the board. And for example, the banks, we had to go through a refinancing as well during last year at the same time. Didn't mention it yet, but we went through 2 efficiency programs as well during last year. a refinancing of a significant loan that we still had from the acquisition of the American company. 120 million that we had to refinance because it was going to be due within 1 year and we couldn't afford that otherwise. And then we did the rights issue as well at the beginning of this year. And that was successful. So it was 60% oversubscribed. So all those things, of course, they help getting credibility with the different parties. And then it becomes self-fulfilling, like reinforcing at some point. But it all starts and ends at the same time with keeping in contact with as many people from diverse backgrounds within and without and outside of the company, and take it from there. But yeah, you're right. I'm really focused on that. When I was working at McKinsey, I was always focused on the client as well. So they called me Mr. Client always already within McKinsey, right? So because I was just speaking in the hallway with people in between, and then you would pick up some things that are the real problems if you are at the water cooler, and then like you hear this or that. And then I could use that as well for our recommendations, even though I was more from the financial side. It was still interesting to know what the big problems were, and you will find out maybe like all the data is wrong, or maybe you should look at it in a different way, or like whatever it is, right? So yeah, I think this is really important. Often knowledge is there already. You just need to get it out of the organization, basically.
Well, it's great to catch up with you at this place in time. And curious, we always like to talk about metrics, but or indicators, which reflect the business's progress. Now, this company's transitioning sort of from an acquisition-led growth phase towards, and correct me if, towards more of an operational optimization phase. And I'm curious what that means in terms of metrics. What you were looking at in 2024 might not be what you're paying attention to in 2026 or 2027. Can you reveal to us how your lines of sight into the business might be changing, what you're looking for, what you're looking at?
Yeah. I think the main thing that we had to restore was credibility in the market as well, in the public markets. And for that, we wanted to become more efficient, meaning less, like more revenues per person, basically, right? So we had the two companies, but we said we would merge them. We would have one platform, and then we would ultimately be more efficient and also need less people to run those platforms. But in reality, we never took the steps. So I think the two things that we did, the two efficiency programs that we did last year, were really to show, okay, now is the moment that we are almost at the end of what we call the migration of the platforms, and we can start reaping the benefits already. So that's one thing. That's on the efficiency side. But at the same time, the people we have in the company, we want to move them as much as possible towards innovation at the same time. Okay. And this is something that's coming out now slowly. So we are launching new products. Finally, like we wanted to do this, of course, also 2 years ago. But the problem is if you have so many old legacy systems, like what are you going to launch on which system? Are you going to launch it to begin with, right? You first need everyone on the new system. So that is where we are now. And now we are finally looking to the future. So we have a healthy balance sheet because of like the rights issue and the loan refinancing and everything we did, cost savings last year. And now we can move forward towards innovation and start growing again. So those are the main ones from a high level. Then when you look at our products, so we are a marketplace connecting buyers and sellers in the research market research industries. And buyers are market research companies who want to have insights, like they do surveys basically. And sellers are so-called panel owners. So they are companies who have panels and they deliver their respondents. So if you want to run a survey of, let's say, 10,000 people, you can programmatically do that through our platform. You can say what you want in terms of age groups, income level, etc. And then it automatically delivers the respondents for your surveys. So this is something that's the key. It's called the Cint exchange. That's our core offering. And there we have, of course, different metrics for that specific marketplace, right? So we want to know that it's fast. We are delivering everything fast and with good quality as well. And we have two maybe not so common KPIs. One is called conversion rate. Of course, it can mean many things. In our case, that means how many people open a survey and actually finish it all the way till the end. So that shows that there's efficiency from that perspective. And the other one is called reversal rate. So we also have that some finish it, but then the quality is not so good because they only click the middle answer, for example, in a survey, right? Or something like that. So in the end, you want real human insights of high quality. So the higher the conversion rate, the better. And the lower the reversal rate, the better. And this is what we are really focused on with every project that we run, etc.
Well, that's great. That's a nice overview for us. Thank you for that. Now, you've mentioned AI a few times, and I know that this company's core value proposition revolves around automation and insights gathering, as you've explained to us. But how is AI further transforming that process? Help us better understand what the AI part of this is about.
Yeah, so we look at it from different ways. So from the inside, I would say internally, we have two layers of how we are applying and adopting AI. So from the one end, we want to empower every employee to use it in their daily life. And here you can think of using Gemini or ChatGPT or whatever you have for your specific, what you need in your life, basically, in your working life, right? And it's not just the rollout of the technology, it's really a cultural shift. So we are actively monitoring the usage of those tools as well and pushing that. We're talking in it in town halls, talking about it. We're sharing best practices as well, like use cases where you can use it for. We're also kind of celebrating like the best ideas or the best things that are happening while using Gemini to maybe inspire other people who didn't try it yet to also try it. So in the end, we want to make our workforce more efficient. And usually those are the tasks that you don't want to do necessarily, right? Like writing a long email or something like that. Of course, you can easily use AI for that. So that's the first layer. And the second one is more about the functional usage of AI. So here we're talking about the different teams. And this is more the business critical one where we look at what is the ROI, the return on investment of actually implementing such a tool, right? And then when I think about finance team in particular, we are rolling it out now for different tasks. So, for example, we are automating key accounting, treasury, tax, and collections processes. For example, we have automatic payment file creation. We have now automatic approval flows for the AP side, accounts payable side. And we just introduced a tool to do balance sheet reconciliations automatically as well. So those are the tedious tasks, basically, that normally people, they have to do it, of course, but ideally they would just want to confirm what the AI already suggests needs to be fixed in the balance sheet, for example. And looking ahead, we are also planning to more integrate payroll to unify like everything over there as well. But then on the product side, and this might be actually the question more from your perspective, our business model is to deliver human insights. So we have real humans answering surveys, basically. And we have a lot of AI supporting that process because we want to be the fastest provider of these insights. So we invested already early on in machine learning, now AI. And that means that we have proprietary solutions, and we're not just leveraging off-the-shelf LLM APIs. So we have our own things as well. And we recently launched, for example, something called Lucy. That's the name of a tool, and that's an in-platform AI study companion. So there you can run your study, brand uplift studies, for example, and you can ask questions in normal language, like how did it run, and your insights will come out. It will suggest how you can improve your study in the future as well, and things like that. And we're also applying it to mitigate fraud, for example. So fraud is also a big thing in the industry. Of course, you can earn money from doing the surveys, right? So you can imagine different parties are trying to automate that process as well from the other side. And we have to detect that. So that's kind of like cat and mouse all the time. So we need to be ahead of the fraudsters, and to have the quality at the highest level. And then the biggest thing in the industry actually is something called synthetic data. So this means that instead of humans, actually AI is already giving you the insights directly. You don't even have to ask a human anymore. And of course, this is both a threat and an opportunity for us, right? So If everything would be done by AI, you don't need any humans anymore, you could argue. So from that perspective, we need to change and also offer this. But we see it more as an opportunity as well, because we can also use synthetic answers to complement our human answers, or to train certain surveys first, for example, before you launch it on real humans. And ultimately also all these LLMs and AI models need to be trained on real humans, and we have the real humans. So that's maybe an extra kind of way we can make money by training those models in the future. So that's something we are actively thinking about, and we are also already working on this. And partly, we're going to offer something soon already in the synthetic space as well. And so this is quite interesting for the industry as a whole, and this is the biggest thing, I think, for the company.
Having observed and built businesses related to different technology-driven waves, let's say, we're wondering how your calculation for ROI related to these AI investments might be different from past investments in new technologies and new waves. What AI requires perhaps a different approach when you're evaluating those investments. Can you share your mindset on the ROI of your AI investments?
Yeah, I think that the biggest differentiator or difference with these AI investments compared to the regular ones, let's say, is that there's even more uncertainty around what exactly it will bring, right? So there are many ideas, but then the adoption is maybe high, but like the effect of it maybe not so much. If you read articles about it as well, I think like 80% is not paying off yet, or it's not fully adopted yet, even though it's rolled out on paper. So it's difficult to have some certainty and reliability around that. So you need to work with a bit more uncertainty. And of course, you can look and take things in certain steps, right? That you say we first reach the first milestone. If that's working, then we invest more. So one example is we launched a tool in HR actually, where employees can ask their HR questions that you normally have, like where's my payroll, or can I have paternity leave, or like whatever it is that you have for HR. We now have an AI bot that was trained with a lot of data by the real HR team, let's say, and that's answering now a lot of those questions directly. And this is really successful. And now we're thinking about rolling this out for any questions you might have, for example, to the legal team or to the finance team, that can be handled by this as well. So like that, we didn't say half a year ago, let's just invest X and hope that all the teams will adopt it. We now know what are the best practices from this first team that we tried it with. It seems to be successful. Okay, great. Now we can roll it out with other teams as well. So that's one way to kind of mitigate the risk there. And then we have a couple of, like the examples I gave for the finance team, they are very specific to a certain workflow where you can actually see that if it works, you know how much time it will save you, right? So you can do a demo, you can run it. For example, the balance sheet reconciliation, you can see how good the quality is of that. And then when you're satisfied, you can roll it out. And also they don't have to cost millions. It can be smaller tools as well. And like that, you can take it step by step as well. So there's not one size fits all tool. For example, even within finance, it's different ones. And then for the different teams, there will be different solutions possible. For example, on the sales side, the go-to-market, degeneration, filtering through, making sure that you talk with the client at the right moment. That can all be made faster with AI tools out there. So that is great. And then the biggest one that I mentioned around synthetic data, that's the big bet. So there's basically nothing you can calculate. We just have to decide together with the board, how much do we want to set aside to have a big bet here. And if it becomes a big thing with synthetic data, then we want to be the number one authority in that space as well. Also defining the quality level of synthetic data. So how do we know that it is actually working? Can you compare it with real humans? What are the metrics to look at? So we as Cint want to define those things before it becomes an industry. But no one knows, maybe it never becomes an industry, right? So this is the big bet that we have. So there is more about how much money do we want to reserve for that. So that's not even an ROI calculation. Yeah.
We want to ask you for a finance strategic moment. But before we do, I just want to continue with our AI discussion a little further, which is you arrived again like 18 months ago. You're stepping into where all these AI large language models are already being used by most of the organization. And I'm curious, maybe finance wasn't part of the AI discussion. Maybe finance had been on the sidelines, given some of the history, that turnover that you talked about. And you found you had to, sort of invite yourself to certain meetings to demonstrate, finance needs to be at this table at this place and time to better understand things. Was that a factor? Not really, or maybe it was you were being invited in.
Yeah, I was being invited in more, I would say.
Yeah.
The struggle I had more was that the finance team was working so hard on survival, basically getting the books closed to begin with. So our monthly close process was maybe taking up to 15 days, which is way too long for a listed company, right? So now we are back to 5 or 6 days, which is a huge improvement. So about now is the time that I could actually, or a couple of months ago, that I could start talking about it within the finance team. Before that, they were just saying, okay, great idea, but I have so much to do. I don't have time to improve this thing that I'm doing. So it was kind of a natural flow of first doing the foundational work, because that's the other thing. If your data systems are like not reliable, you can put AI on top, but it doesn't matter. It's still unreliable, right? It's the garbage in, garbage out principle. So we first had to do that, and we're still not 100% perfect, but we know which elements we can rely on and which ones not. And there where we believe it's now stable, then we can put AI solutions in place if and when it makes sense. And that's what we're doing right now. So the examples that I gave, they're all from the last quarter or so, I think.
Interesting.
Before that, no one wanted to talk about it with me.
There were other priorities. Understood.
Exactly.
Well, thank you for that. We are up to what we like to refer to as our finance strategic moment question. Again, this might have happened any time in your career. Frankly, Niels, we're just looking for a good story about how finance plays a strategic role in business. What would you share with us?
I had a couple of examples, but the one that I like the most is where pricing became a strategic revenue driver. And the situation was that I joined a new company, marketplace model as well. And the sales team said that the gross margin of every transaction was 40%, 40. And then every time we would close the books from the finance side, gross margin would be 20%, like literally half. So of course, like everyone doesn't like no one likes the finance numbers, right? Because the other ones are better. And I've seen this at multiple companies that the operational dashboards are often much better, much more positive than the financial actual numbers. So then what I had to do is to first of all bridge the gap, of course, to find out, like, are we missing something on the finance side? Are we putting too many costs in there that don't belong there? Is it in accounting, like some mislabeling or whatever it is? In the end, of course, the finance numbers tend to be right because it's cash-based ultimately, right? So we have those costs or we don't have those costs. We did have them. And it turned out that the 20% was right. And the difference between the operational dashboards and the finance numbers were that rebates, discounts, and some like free products, free services were not in there. So often sales gives a rebate or a discount, or they say you buy 100, you only have to pay for 90 because you're a new client or whatever it is, right? So then I had to actually allocate that at client level. And of course, the data wasn't possible to deliver this. It was too difficult. You couldn't match it, etc. So I had to do it a bit in a manual way. And then it turned out quite shockingly that many customers, we hardly made a margin. And the number one customer, they were doing about 30% of the revenue at that time. They made 0% gross margin. So I'm not even talking about any margins underneath, right? So if you make 0%, you might as well not do it. And this is what I was trying to sell and to explain to the sales team as well. So then with the new metrics showing the true profitability of the clients, I showed that it's impossible to become profitable as a company if you're not even selling on a margin, right? So, and then I decided to start a new department. Like the pricing department didn't exist. So I hired a pricing director and I made him report into me as the CFO. So not working for sales, because then it would be like the discount director and not the pricing director, right? So I took him and then I said, all the pricing decisions now go through this person. And I discussed with him everything. I abolished all the rebate programs, all the discount programs. So we don't do them anymore. When they come up for renewal, just say we don't have it anymore. Of course, there will be exceptions. The exceptions have to go through the new pricing director and myself as CFO. And like that, usually sales teams, commercial teams, they don't like processes, etc. So half of them can't even be bothered to go through the process to ask for a rebate agreement, right? So that's one half that you already win. And then the other half would go to me, and then I could explain to them how to think about it, how to structure it if you want to give a rebate. You can do it, but only if they actually increase the volumes with us, not just a rebate for rebate's sake, because what's the point, right? It's just a race to the bottom. And then you can prove this with numbers for their specific clients, showing like profitability levels with the different rebate possibilities. And also I changed then the incentive schemes to net revenues instead of the gross revenues before rebates, etc. Right? So as soon as the commissions are only on the net ones, of course, everyone was highly interested to know how you calculate this, how it works. So all in all, within 12 months, we actually went from the 20% gross margin to the 40 that they were thinking they were already at. And that was really huge because that meant that from every dollar spent on the platform, we were making twice as much money. And that ultimately helped bringing the full company to profitability, whereas before it was burning cash all the time. So I think this one is really a great example that I wanted to bring up here.
Excellent. Thank you for that, Niels. That's exactly what we're after. Appreciate it. We're going to move to what we refer to as our mentoring round. We're going to ask you to look back again. We want to know about the first time you stepped into the CFO leadership role and what you might have been unprepared for, frankly. I always say, if you could go back and just tell yourself this one piece of advice, but something might have surprised you. You had observed CFOs up to that point, thought you knew the role, probably well, but something surprised you about it. Anything?
Yeah, I think the main thing that you don't expect before you step into the role is that the real power doesn't lie in possessing the numbers, but it's more in the ability to shape the narrative and the interpretation of those numbers. And that's a huge difference. And I was always, before working at McKinsey or other companies, the person who was making the materials for the board meeting, the materials for the investor meeting, etc. So you think it's about the materials, right? And I was really an expert in making the best looking slides, etc. McKinsey style. Every footnote was perfect and adding up, and every number was thought through in depth. And then many meetings, they don't even open the whole document, or they open one page and the discussion goes elsewhere. And so it doesn't really matter what you do with the data somehow. And every stakeholder on the table, they have their own agenda, right? So the same numbers, even the same facts, will be used in different ways because no one knows the future for sure, of course. So there's always an element of subjectivity there. And everyone will use it to their benefit. So if you already wanted to invest in growth, you will say, aha, last month's growth rate was 1% less. Now we need to do it. Whereas another person might say, I want to save costs already. Aha, sales is down 1%. Now we should save costs because it's going down, right? And you can argue both things with the exact same underlying data. So I think this is something that I've seen many times through the years. I'm now 13 years CFO. I've seen so many decisions that might not make sense logically based on the data if you would have to explain it to someone not in the room. But then somehow when you're in the room, it makes sense from all the different perspectives coming together. So I think this is the most underestimated factor that you also cannot really train so much. You just have to go into it and experience it.
Niels, we always like to have our guest reflect a little bit on the personal side of things. We wonder if there's something most of your colleagues might not know about you. You've been there only 18 months, so there must be something from your past, a chapter of your career, maybe your early life, anything?
Yeah, I was thinking, and in the end, like life can be quite hectic, of course, as a CFO, right? And especially when it's global, I'm traveling a lot as well. So I'm based out of Amsterdam, but always working from anywhere in the world, kind of. So to clear my head, I turned to sports like running on the beach. I live close to the beach, or swimming or hitting the gym. I think that's not so surprising. More surprisingly is probably that I like also gardening a lot. So I have my own garden. And I grew up on a so-called flower farm in Amsterdam. So outside of Amsterdam, you have these long tulip fields. You might know them from TV or something, or maybe you visited there. And nowadays, I again live in the area where all the Dutch flower bulbs come from. So my father used to have a flower farm himself. And I do like the hard physical work. So like going into the garden for 3 hours in a row, just with some podcasts, for example, your podcast I've listened to as well a lot, of course, while being in the garden. And then when you're done, you look back and you actually see, okay, tangible result. The garden looks much cleaner now, or it's in better shape. I think that's a great, alternation from life with a laptop, Zoom calls, and Excel sheets, right? So I think that's great, and something I don't talk about daily with people.
Nice. Nice example for us. Thank you for that. We are up to our final question, which is to ask you to look forward finally, and we'd like to know your priorities as CFO of Cint for the next 12 months. What would those 12 months?
I think for the next 12 months, it's kind of the continuation of the path I'm already on. So we need to improve a lot of processes still, merge a couple of more systems here and there, but we have done more than 80-90% now. And then we can also look at the application of more AI automation tools, what we were just discussing. I think we're just scratching the surface there. So this is something I'm really looking forward to. And at the same time, improve the collaboration with different departments as well. So that already improved a lot during the last 18 months that I'm around, but we can always do better. So in the end, I want everyone to think of this finance team is the best team out there. And like that also raise kind of the self-confidence of the finance team by doing that. Whereas we come from the opposite situation, let's say 2 years ago or so. So this is something I keep on working on. And this is also a huge motivator for me to continue to strive for the best.
Niels Boon, thank you for joining us on CFO Thought Leader.
Thanks a lot.